Monday, 8/2/26. Let's talk about the market. So what I'm seeing when I'm looking at SPY, here we go again. It's just this huge consolidation pattern. Everything's just been bouncing around here. Just, I don't like it. I really don't want to make any kind of big moves while this is just in consolidation. I want it to move either out of this consolidation up or out of this consolidation period down. TPO could turn. It looks like it's turning slightly right now. Looks like we have some bounce back over here recently, but time will tell. I'm seeing in the headlines right now that there might be a peace deal, so that could create a catalyst to move the stock market up next week. Let's see. I also want to just touch base on a couple things. I like swing trading. Long-term investing, I think you really need to watch the markets. And I have a video that I made before about the dot-com bust and the great financial crisis. Holding long-term during those periods of time was stupid, especially if you were near retirement. You really need to watch the market and get in and out accordingly. So there's long-term investors, swing traders, and day traders. I don't have time for day trading. I primarily swing trade. So just some background really quick. So if you are a long-term investor, ideally what you do is look at the year, the quarter, the month, then the week. You'll understand the primary market cycle, confirm the long-term momentum, find better entry opportunities, and avoid buying against the trend. Swing traders, what I like to do is I look at the month, then the week, then the day, then the hour. The monthly chart shows direction, the weekly chart confirms momentum, the daily chart identifies the setup, and the 1 hour helps execute with precision. Day trading, most people look at the day, the 4 hour, the 1 hour, and the 15-minute time frames. Use the higher time frames to identify the trend direction, key support resistance, institutional participation. So having said that, here's the SPY again. Again, I'm looking for either breakout or breakdown. There are different things that you can use that can show you exactly the 5 minute, the 15-minute, the 30-minute, the 1 day, and several hours in terms of what they're doing at any given time. I talk about that in my Patreon group. So why the multiple time frames matter? The higher time frames give the market direction. The middle time frame gives a trade setup. Lower time frame, entry and exit. Lowest time frame, risk management. So professionals combine them together instead of relying on just one chart. And so we just discussed the trading hierarchy, and then the time frame alignment equals higher probability. So the trend is higher, entries become clearer, stops can be placed more logically, and confidence builds. So let's look at QQQ. I don't like this one at all. It broke below the consolidation. Now it looks like it found some supports bouncing back. Let's see what happens next week. I'm watching the PPO for any kind of turn. And again, what I'm concerned about with the QQQ is we're finding what's the definition of a downtrend? Lower highs and lower lows. And you're seeing that lower and lower and lower, new low highs, new lower highs being formed, new lower lows being formed. Not good. I'm waiting for some kind of movement in the right direction. It's starting here. Let's see if it continues. So just be careful. I was out of the trade once it hit below the consolidation, switch strategies. If you found value, please like and subscribe. If you want a deeper dive and some of these indicators that I use, please go to my Patreon memberships.